In this video, we're going to consider hedge fund jobs, right? Hedge fund jobs typically pay quite well. They're a bit more risky than working in a traditional investment bank, but it's worthwhile considering what's going on, right? There tend to be multi-millionaire makers, as you can see on your screen right now. We're going to go through a few articles, a few of the positives and negatives of working for a hedge fund, and you can learn from this to benefit your own career. Now, if we go through this particular instance, let's see what it says here. It says that on average, bonuses for hedge fund professionals increased by 48%. So let's just say a 50% increase in bonuses, right? Now, let's just talk about how much they're getting paid, right? So if you go through this, let's go to the last column here. So the average compensation, depending on the level you're at, right? If you're at the more junior level, at an analyst level, the average pay was $224,000. So that you're getting paid close to $250,000 as an analyst starting your career. And then if we go up to director level, you're getting paid $500,000. If you're managing director, you're getting paid over $2 million, right? So these are significant amounts of money, right? So I think it's worthwhile considering what are the cost and benefits of this. Of course, if you have the opportunity to do this, definitely consider doing that. The one thing I'd say about hedge funds with any firm, sometimes when you see these numbers, you think this applies to everyone, but typically this applies to the front office, like people who are directly dealing with clients, directly doing the trading or sales roles when it comes to the clients. But there are many other support roles where you can still get paid a decent six-figure salary, maybe in their finance department, their HR department, their risk management department. It might not be as high as this, but it's still quite high pay. And it's relatively a chill work environment compared to some other finance jobs, like working in banking where you have 100-hour work weeks. You're not going to have that here. Now, these are some of the best paid people in financial services, as it's mentioning here, earning an average of $2.1 million, right? For people at the senior role, at managing director role, right? Now, a lot of it is paid in bonus. As you can see here, the average their salary is, depending on the role, is around 100 to 250K. But the bonuses are massive, right? The bonuses are like 500K, 300 bonus. So you see a lot of that is based on performance. And the markets are quite volatile. And hedge funds are known for making very decisions when it comes to trading strategies, right? They have these high risk trading strategies. That's why sometimes hedge funds are hitting all the headlines and making millions of dollars, tens of millions, hundreds of millions, and then all of a sudden they're not. And then people are like, what's going on? They tend to pursue very risky trading strategies. They might have one or two main strategies that they're pursuing. They could make a ton of money, but if the market goes in the opposite direction, they can also lose a ton and have to have a ton of job cuts. So not necessarily the most stable job. So let's talk about what's going on for these people in this profession. Everyone knows that working at a hedge fund is the holy grail of financial services. They pay well, they have relaxed work hours. What's not to like? So it says here, the real advantage to working at a hedge fund, on top of the huge pay, is the working hours. Compared to investment banking, it says working about 54 hours, which is completely unheard of in many finance jobs in the banking industry. Typically in banks, of course, you'd be working at least 60 hours. Here they're working, about 50 hours a week, which is kind of very low how much they're getting paid. So it talks about how much they're getting paid per hour. Now, the average hedge fund professional is getting paid $237 per hour. So that's a lot of money, right? So $200 an hour is quite a lot of money, of course, for working in this industry. And then it says, within the industry, depending on seniority, this range from $86 an hour for analysts, people at the more junior level, and then people at the more senior level who are making $801 an hour, people who are managing directors. So to show how varied that pay could be, so you could go from making $80 an hour to $800 an hour, depending on your level of seniority. And what's interesting is how much money you make when you're more senior and you still have long work hours, right? The average managing director or the more senior people were making a bonus of $1.8 million and they're working less than 50 hours a week. So that's a lot of money, right? Working less than 50 hours a week and getting paid almost $2 million, let's just say. Someone's saying here, someone's not happy working their job at the hedge fund. I'm working the night shift at this San Francisco hedge fund. The work hours are not strict. I only have 3 days holiday a year, and there's a small gym, things like that. So, you know, it's just a bit joke there, but that's a real comment. But it's like, it goes to vary people's lifestyles are. I've covered other examples on this channel about people dealing with layoffs, people who are highly skilled in the tech industry, and then you've got some people here in the finance industry who are making so much money and they're working 50 hours a week and relatively low stress. Of course, sometimes they have more hours, working late at night, working throughout the night. It could vary, but it's still quite a lot of money for the position they're in. Or some reality checks, right? You're not just here for, oh, well, these guys are making a lot of money, it's the best thing ever. Let me tell you, hedge funds, again, you can make a lot of money. They have a lot of risk in terms of their trading strategies, so they might have layoffs. They're very small and niche, so you have to be on good terms and friendly with everyone. You can't have disagreements with senior stakeholders there because they will just fire you, replace you. There's not much room for internal moves, so you'll be stuck in one particular role because typically people don't leave. They're getting paid a lot of money, they're not working long hours. So if you're in a where you don't like your particular role, it's very unlikely you're going to be switching to another role at that company. You probably have to leave. And then the other thing, there's lots of gray areas, right? There's always scandals around hedge funds because they tend to have investments from maybe shady in third world countries. They might be doing dodgy corruption type of trades around arms deals. I've seen things like this. And also they're basically connected to many wealthy people and wealthy companies who might not be in the right thing. So sometimes you have investment companies, wealthy family, wealthy, you know, people are worth millions, hundreds of millions, and they can't directly interact with a bank to do certain risky trading strategies or questionable investments. So they use a hedge fund as like the middleman to help with that. So that's why it's very interesting what you might get involved in there. It could be very risky, let's just say, business strategies, and then they pay a fine and they go back to doing the dodgy thing. I've noticed things without naming banks, investment hedge funds where I've been, where they do this. They get involved in many dodgy transactions. They make a ton of money, they pay a small fine because the government finds out, then they rebrand their hedge fund, they change the name of their hedge fund, they're in the same offices, they have the same people there, but they just rebranded to clean up their image. And it's kind of funny because you know who they are, you can easily Google them, but they've created their new image around themselves, or, oh, they've reformed their ways, but they're really doing the same thing. So it's not completely following the financial law and regulation the way they should. Like I say, it's a bit more of a risky type of situation. Now, the other thing I want to focus on is, you know, how they get this much. And Jane Street, which is a very successful investment firm, who are paying $1.4 million each to their employees. Now, it's talking about how they're getting paid a lot of money here. And what's interesting here, it describes this particular investment firm or hedge fund type of company who are a bit communist in the sense that they're allocating pay depending on the performance of the firm rather than the individual. Now, I just want to explain this here because many people think about these big bonuses and they think, oh, if I work hard, I'll get a big bonus. But so much of the bonus depends not on your ability or the quality of your work, but how the company overall performed, right? And sometimes it's a balance, 50% based on your performance, 50% based on how the company performed, right? Or it could be a different balance. And here it's just talking about how they weren't, when they were assigning what bonus everyone should get, it was mainly based on how the company performed rather than what your individual performance was. So it's interesting how that can vary. And that's why sometimes, you know, when you work hard at a particular company, a hedge fund, investment bank, tech company, whatever that would be, and the company doesn't do well overall and you worked really hard, you might not see a big bonus. But there are other years where you do average work and you get a big bonus because the company did well and you didn't do much work. So it's a very funny, varied situation. And then when it says, what is the Jane Street spending money on? If they're not spending money on employees, it's technology, right? They're focused on having 5,000 powerful GPUs and having all this data they're processing, costly data centers, and they need technologists, right? Technologists who earn less than traders, but still earning a good salary as a tech employee in the finance industry. And they account for about 40% of the headcount of this particular investment firm. Now, the reason why I'm saying this is because many people in the tech industry are losing their job, and you should look to pivot to finance if you can. There are niche opportunities like this, and you'll be on a higher salary too, right? This is a company that generally pays quite well. So look into moving to finance. Other companies, Citigroup, a major investment bank, of going through a tech transformation. They're hiring tech, even though they're having layoffs for other areas of their company. And then also the tech in a lot of finance firms, even major American investment banks and things like that, is kind of outdated. You'd be surprised. You see these trading systems, they're old and outdated. If they're going to be to help develop those systems. So don't feel so down and bad. Like if there's a downturn in your industry, there might be something adjacent, like switching from tech to finance, tech to a hedge fund. Now, looking through this last little article here, we have hedge fund careers of a Goldman Sachs guru. That looks like a bit of a warning, right? This is kind of an interesting story. Now, Alex Blanchard, who was working at Goldman Sachs, he might have made partner, and which would be a very senior role at Goldman Sachs, but he left in July after 20 years at Goldman Sachs, right? So why did he leave, even though he's probably going to make partner and get promoted to a very senior role? Instead, he went to Point 72. I've actually interviewed there before. They're like a hedge fund. So he went there briefly to work in Dubai because they have lower tax in Dubai compared to working in, you know, the West, where the income is quite high. So he moved to Dubai, working for this hedge fund, but then he's out for reasons that aren't pointed out. Now, this is an interesting example, right? Because sometimes you go to work for a small company and you go and relocate from, let's say, London or New York to Dubai, and then all of a sudden there's a personality clash. Then you lose your job, or they force you out, or they ask you to quit. And then all of a sudden your relocation's gone wrong. Your whole new life in a new country with lower tax, with better quality of standard of living, and that all of a sudden it's gone wrong, and then you've lost your job. So be careful around relocating for a job. Make sure it's the right fit and you've got a plan B in case it doesn't work out. Now, the unconfirmed suspicion is that he was described as a stir group guru, a short-term interest rate trading guru. He lost money during April due to certain trading activity, and essentially there was other cases where you had top traders who had significant losses, like another trader at another hedge fund who had a loss of $140 million in April because of changes in the market due to the tariffs that Trump was putting in. These are the type of things where you might be a big name in the industry and go to a hedge fund, you're taking massive risk. There's all sorts of massive losses, like another guy who lost $140 million. And then all of a sudden you're pushed out the company because you had one big bad trade. This is the type of risk when you go for a smaller company that's going to pay well. But even if you're not in a trader, I'm working in the tech department of a hedge fund, one major mistake and they want to push you out. So you just have to be careful. Everything has to be meticulous. The reason they're paying you that amount of money is that they're trusting you to be very effective at managing that type of risk, right? That comes with all roles in the finance industry, right? All high paying roles. It's all about, they trust you to be accurate and diligent and avoid mistakes, because a couple of mistakes can really result in big errors, right? Now, what's happened here is that the company of this other example of a hedge fund employee who had a loss of $140 million during very volatile trading around the Trump tariff situation. The company was actually down significantly in terms of their profit, down $80 million. Now, it's a big risk, right? It's difficult to recover from. If you're working for a company, you make one big mistake, particularly if you relocate there, they might just want to push you out and say, okay, we want to cut the risk by getting rid of the people who made a few mistakes. Now, the other thing I want to point out here is talking about how losses made at the hedge fund need to be recouped before you're eligible for a bonus, which means that unlike working for a big investment bank or a big tech firm where you might make a small mistake, but it's not going to impact the whole company overall. If you're a trader in a hedge fund, or maybe you're a senior tech guy and you make one serious mistake, you know, the company is so small, it's going to take a hit to their profit. It's not like you make one small error in the asset management department of Deutsche Bank and it's going to cost maybe, you know, a couple $100,000 to fix. It's like, okay, this is dollars. It's going to really eat profit. It's a smaller company with bigger risk and bigger stakes. So you have to be careful. And that's why people do get paid a lot of money not to make those mistakes, right? And to be, you know, staying in late at night in some cases to make trades are going as intended. So it says here, if you lose 1%, you need to make that 1% or more very quickly to make back that money and make sure you're still getting paid a decent amount of money for your salary, right? So this whole situation here is this employee who went to Point 72, moved to Dubai, lost his job there. He could go work at another hedge fund and do this type of risky trading activity. And it's here at the last point, Dubai is a difficult place to be unemployed. And what that means there is if you're working in Dubai, you lose your job. I'm not sure the exact amount of days, but you have to leave quite quickly. It's like you don't have a work visa, you can't live in the country. So you are moving abroad. Now that's a very quick overview of hedge funds, right? So what do we have? We have high salaries, $1 million salaries, multi-millionaire makers. Then all of a sudden you have quite difficult scenarios whereby, you know, people are having a couple of mistakes and pushed out. Now, there's many things we can learn from this. So if we go through my course actually on this, I cover this in a bit of detail here about dealing with these different type of scenarios actually on law 4 of my course. So the course linked in description, career code, own your time or the company will. Is people are making a ton of money for very few hours worked. Now I think there's a bit of exaggeration here in terms of they only work 50 hours a week. I think most of their work hours are going to be 60 to 80 work hours a week. Most realistically, maybe they're not reporting all of that to these surveys they do for how many hours people work. But the point remains, you want to own your time or the will. How much money are you making per hour? If you're doing all this extra work, working any corporate job and you're not getting paid a lot of money, maybe reduce your work output or work more effectively during the work hours so you don't stay too late. No one's really impressed by you burning yourself out. So own your time or the set strong boundaries, non-negotiable life goals, review your calendar weekly, ensure each hour you have at work is serving your goal of making more money in that job. So this is all covered in my course, which you can look out for in the description. Now, what else do I have to offer? The main thing I have to offer is to help you build your career to take control, to have more power, pay, and freedom. Now, I've covered this throughout this actual video, right? The amount of high paying jobs you can get in the finance industry or other top industries I've helped with. I've worked personally in the finance industry at top roles at director level at companies like Goldman, Morgan Stanley, and HSBC. Successfully interviewed some of these high paying 6-figure roles at JP Morgan, Citi, and Deutsche Bank, and so on. And including these hedge funds, right, like Arrowgrass, Citadel, CVC, other top firms too. Now, I help career coaching, link in description if you want to work with me directly. And what I'll do is I'll show you how to build like that real financial freedom you're looking for, right? You want that independent system. You don't want to be dependent on one company. You don't want to be in a system that kind of no longer rewards hard work. You have to work effectively to put yourself in a position where you can have those high salaries without burning yourself out. And this is what I try to teach my my clients, right? By building a career that's tailored to their specific skill set and their lifestyle design that they want. So there's a link in description for that. Also, I have the course I mentioned earlier, which will help you master office politics. There's a free ebook, 48 Laws of Career Power, of dealing with, learning from the career secrets that help me gain power and work throughout these corporate roles. There's also a link in description for my free newsletter where I give you career advice on a Monday and Friday, twice a week. So you get free career advice, literal things that work for me in these type of corporations. So that will really help you out too. So there you go. The main thing is the career coaching though, that help you build power, pay, and freedom. Let me know in the comments, how do you feel about hedge fund jobs, about these salaries? Would you work for a hedge fund? Is it not your kind of job? And let me know in the comments how you feel about that. Recommended videos on your screen right now, and I'll see you next time.